What caused the Silicon Valley Bank to collapse? For the past 5 years, it had been considered the top bank in America, with a primary focus on catering to startups and venture capital firms. Between 2020 and 2022, the bank experienced significant deposit growth from $62 billion to almost $190 billion. This growth was largely due to businesses and startups struggling with meeting their working capital requirements and funding their operations after pandemic-induced lockdowns. The United States Federal Reserve reduced interest rates to enable these businesses to borrow money more cheaply, and many investors began to borrow at lower rates and invest in various startups, even if they were not profitable. These startups deposited the raised funds into Silicon Valley Bank accounts for future use, which contributed to the bank having a high amount of deposits. Silicon Valley Bank decided to invest about $127 billion in government securities, which are considered default-free with almost zero risk. However, these investments were made when interest rates were low, and as the Fed increased interest rates to combat inflation, bond yields dropped sharply, leading to a fall in the value of the bank's investments in government securities. This coincided with the start of the funding winter as investors did not want to borrow more money to fund startups at higher interest rates. Startups had to withdraw their deposits to carry out regular operations and to pay off depositors. The bank had to liquidate the investments in government securities, leading to losses of about $1.8 billion. To offset these losses, Silicon Valley Bank announced a share sale of $2.25 billion and sold $21 billion worth of securities from its portfolio, leading to a bank run among its depositors who wanted to avoid any losses. The U.S. government appointed the Federal Deposit Insurance Corporation as a receiver to provide insurance for deposits up to $250,000. While this addressed concerns around the fate of uninsured funds, startups holding over $1 million in deposits still face risks. On 12 March 2023, the U.S. Treasury, the Federal Reserve, and the Federal Deposit Insurance Corporation said the government would back Silicon Valley Bank deposits beyond the federally insured ceiling of $250,000. The decision addressed concerns around the fate of uninsured funds held at the Santa Clara, California-based bank, the country's 16th largest, which had $209 billion in assets and more than $175 billion in deposits. Depositors will have access to all of their money starting Monday, March 13, the agency said in a joint statement Sunday evening. Depositors will have access to all of their money starting Monday, March 13.